All right, what you're about to witness here is a pretty unique video. I never thought I'd be releasing it like this. It was a podcast that was done on someone else's channel. It was a podcast interview, and they decided not to put it out. But I think that the content and these particular snippets are very, very good in order to understand what's coming next for Bitcoin after the ETF. Before we get into that, though, I want to point out something. A lot of people hate the idea that a bull market multiple is as high as what it is. You got a lot of traders, doom and gloom boomers, happy hippies, and $10 a month DCA gang members that are walking around saying the bull market multiple isn't what the bull market multiple is. Well, I got tagged in a tweet today from someone who's been paying attention. He's an analyst. His name is James Stratton, and he basically pointed out, he tagged me in this tweet, and he pointed out that the Bitcoin market cap went up $40 billion from $810 billion to $850 billion today. That's happening today, right now, on the 5th of December. But looking at exchanges, he's an on-chain analyst, I believe. Only 350 million has actually come off of the market, right? So what that means is that the multiplier effect was about 114 to 1. So if you need any more evidence, you just got to look at the actual price action that's going on rather than thinking the bull market multiplier is wrong. And this is very important because if you're constantly thinking the bull market multiplier is wrong, you're going to wake up one day and Bitcoin's going to have a 10% up there and you're going to realize you've just been left behind. That's how important this is. That's why I keep pointing this out as hard as I do. The one thing that clicked for me when it came to Bitcoin in my own journey was the value of its scarcity. This is why I focus on sharing that message with as many people as possible, and why I need you to subscribe to this channel. Help me, because if the faster you subscribe, the faster the YouTube algorithm gets spanked, and it tells the YouTube algorithm to put Bitcoin content in front of other people. This week, I've got a bunch of videos coming out because a few of my friends have been pissing me off by talking about why Bitcoin is not as good as real estate because real estate has cash flow. About to assassinate all of that in this upcoming week, which is why I need you to subscribe and share the video to other people, share the videos to other people too. Now, this particular snippet is a selection of points from this podcast that will never see the light of day, unfortunately. And it is, I think, important to understand what is coming after the ETF. Remember, a lot of people are extremely happy right now because of the ETF. But there are a few things that are going to happen as a result of the ETF, and that's what's important. So let's get to this snippet right now. I think there's a lot of people really focusing too much on the philanthropic side of Bitcoin and not on the absolutely selfish side of Bitcoin, which should be to secure your family and your progeny's position in the world that is emerging. And the only way to do that is to own as much land as possible. Most people don't appreciate this because they either feel bad about it, they feel guilty about it, or whatever else. I don't. I want to secure my progeny's forever position in the Bitcoin economy that is growing. And I believe that the way for the average person to do that is going to be to have at least one Bitcoin. Of course, I'm talking about Western economies and Western markets. If you're in a third world nation, it's probably going to be less than one Bitcoin. Is going to give you a solid position. But I think getting to one Bitcoin should be the North Star, and you either get to one Bitcoin or you die trying. I'm not a big fan of DCA. The only time I'm a and again, a lot of people misunderstand DCA. As an investor, true DCA is I have $100,000 and I'm gonna set up a auto payment purchase, right? And I'm gonna buy $1,000 of Bitcoin every week for the next 100 weeks. That's true DCA. Everybody thinks that they're doing DCA just because they get a paycheck and then they lump sum that paycheck into Bitcoin every month. That's actually a lump sum purchase, right? Every month. And so I'm not a big fan of DCA unless you can start DCAing at the very top of the market and stop DCAing at the very trough, right? So if you can do that, I think DCA works. Every other scenario, I think you're better off lump sum purchasing as long as you're holding for a 4-year period and understand what the asset is. Now, of course, it's tough. I'm not here to baby anyone. The opportunity and the window for Bitcoin and acquiring one Bitcoin as a person who is in the middle class is closing. And that's what Bitcoin does. Every single cycle, it's pricing out people. It's priced out the poor around the world. It's now priced out the middle class in the West, because who has 40 grand in the middle class just to plop into Bitcoin that you don't understand what this asset is or anything like that? And soon, I believe it will price out low single digit millionaires. And then in the cycle after that, in the 2028 cycle, I think we start pricing out, that lower bound or that ultra high net worth. Because even if you've got like $4 million net worth, most of it in that range is in real estate. So what are you going to do? Sell half a property to get into a Bitcoin if you don't understand what the asset is and your learning curve just started then? So it's going to get tougher and tougher. And I'm not here to lie to anyone. Like, the opportunity is running out. The window is closing. And so either you get to one Bitcoin or you'll be working for Bitcoin. I've never, ever, I don't think, put out my personal price prediction since I started my YouTube channel, right? I don't like to, because everyone looks at someone like me and goes, "Oh, you're just a YouTuber." So, okay, let's stop talking about a YouTuber. Let's talk about the ex-managing director of BlackRock, who at a London conference said he estimates $200 billion of capital inflow into these ETFs within the first 3 years. That's about $190 million a day worth of purchasing. Fundstrat's research showed us that it's taking about $25 million a day to manage equilibrium price today. Now, if you add another $195 million a day onto that, you're looking at the price skyrocketing to roughly 200,000 before we even start, before we even factor in that the HODL rate is going up, before we even factor in that the supply is about to constrain, before we even factor in any bull market multiple that I've been talking about that Bank of America put out in the last cycle, before anyone was even paying attention to what a bull market multiple is. Like, I'm estimating that this goes to $100 trillion market cap, which is around a 4.7 to a $5 million Bitcoin price within the next 20 years. Now, I think it's going to be a lot sooner than that, but I think 20 years is a good horizon. It's not scary enough for people to shit themselves when you talk about the next 8 years. So I think $5 million within the next 20 years, $100 trillion market cap. And people go, 100 trillion, $4.7 million Bitcoin. That sounds crazy. It's only $100 trillion market cap. Real estate's a $330 trillion market cap. Bonds is $120 trillion, maybe more now. Like, this is not, we're not talking big numbers here. It's not even realistic. It's completely child's play to me, because what I think Wall Street's biggest scam to the whole world, as far as Bitcoin goes, is saying that Bitcoin is gold 2.0. Bitcoin is not gold 2.0. If anything, Bitcoin is real estate 2.0, right? It is more of a land play than it is a gold play. And to think that Bitcoin's not going to supersede gold. I mean, how many times do you think Bitcoin is better than gold at being gold? Right? So if that's the case, it's like, okay, well, let's multiply the market cap by that. And the opportunity is the spread between price and value. That's what we have right now. So, I think that I look at real estate as, I look at real estate as the target, not gold. So I think that Bitcoin is at least 3 to 4 times better than real estate at being, a treasury asset, a retail asset, a liquidity generating asset, a debt generating asset. So when you think about it like that, it's like, what is Bitcoin? The first quadrillion-dollar asset? If it's only 3.4 times better than real estate. Real estate's 330 trillion already. So if Bitcoin's 3 times better than real estate, it's a quadrillion-dollar asset. The conversation is very simple. It is, do I get into Bitcoin, which is unproven, unregulated, everything in the world, or get into real estate, which is stable, proven, I can generate a cash flow from it. I need a cash flow. I need a cash flow. I need a cash flow. That's the argument, which is why I think your conversation that you've been having around the fact that, layer twos could generate a risk-free rate on Bitcoin is very, very important. It's not ready yet. Right. And the lending markets, in my opinion, are not ready yet. There's no way I'm going to be giving my Bitcoin to any of these lending companies. I was on Clubhouse talking about how stupid the idea of giving your Bitcoin to BlockFi was in 2021, and obviously we saw what happened. You're basically taking an 80% CAGR asset, trying to give it to BlockFi, which is completely unproven, to generate 82%. How does this make any sense? So However, that will come. Those markets will come because now players like BlackRock, Goldman Sachs, JP Morgan, all these guys are going to get in, and they'll have models that will allow them to value carrying that risk through the volatility of Bitcoin and still allowing lending products on it, as long as you can, in essence, time lock your holding, right? Because you can actually define the supply of it, unlike anything else. If there is the problem with real estate, biggest problem with real estate is everyone thinks that the demand is the thing that goes up and down with interest rates. People don't understand how easily supply is manipulatable with real estate. Any government can issue an order. Any government can issue a demand that either increases or decreases the supply of available real estate at any time. It's happening right now in every state in the US, every country in the world. Why? Because if they don't bring down or make manageable the prices of real estate, they're gonna end up with a riot on their hands, and they can't afford to do that. Real estate is the most easily controllable asset. Real estate is more easily controllable than gold. That's why governments gave you a 1031 exchange in the US to put your money back into real estate so it can be controlled. And so, yeah, the conversation is around cash flow. The conversation is around, unregulated, unproven, which is why I've been banging the drum about the ETF so hard, because this is what changes the mind of someone who's got a $5 million, $8 million real estate portfolio. It's like, wait a second, I can just go to Charles Schwab, press a button, and immediately get exposure to Bitcoin, because that's what they want right now. They want exposure. One of the things that I like to look at very simply is look at the values of real estate versus M2. And really, we're experiencing a 2008 style low from my perception in terms of has real estate actually kept the value that M2 expansion has caused. And that's really the problem. People think it's all about price. It's really not. It's about value. If you bought a property in 2008 and today it's gone up 50%, but the value is basically the same as 2008 because of the amount of money printed, you've basically had a good mental masturbation 12 years. That's it. You've not generated any new wealth. So if anyone is, and my parents are in this situation, right? Immigrants to the United Kingdom, got kicked out of Africa. Immigrants, my dad's side, immigrants to the United Kingdom. My mom's from India. And they did the right thing for 35, 40 years, built a property portfolio, sacrificed, as I'm sure many, many families around the world have, only to find out that their hard work should be worth, 60 to 80% more than it is because of the amount of pounds printed. And the assets, because of the ability to manipulate the supply on the assets, has not allowed the value to keep up with the amount of money printing that's happened. And this is with the number one premier asset on earth, which is real estate. I'm not an ETF expert, right? I've been an investor for almost 20 years, but I'm not an ETF expert. I'm not a legal expert when it comes to ETFs. So I can give you my perspective on it. I probably would lean on the guys at James and Eric at Bloomberg for more specific info on that. But from my perspective, a cash creates ETF, there's two types, right? There's an in-kind and a cash creates. A cash creates is one where the authorized party that receives the capital has to send that capital to the ETF provider, who then has to, based on the mandate of the ETF, acquire the Bitcoin in the market. The alternative way of doing that is an in-kind ETF, where the authorized party can go out and hand out to broker dealers demands, and they can go and get swaps or whatever else for that asset and then just send it to the ETF. I think it was a great move by the SEC. Every single ETF that is currently trading in Canada is a cash creates ETF, and it seems to be working fine. So what this does is it allows it's like, for example, let's say you had a cookie jar, right? And you were very, very proud of the quality and the taste of the cookies within your cookie jar. And somebody said to you, hey, I want to put my cookies in your cookie jar. Would you prefer that they just gave you the money and then you bought the cookies that you could approve having the good taste and the good quality and put them in your cookie jar to maintain the quality of it? Or are you going to be okay with just eyeballing as they go ahead and put their crummy cookies in your cookie jar, right? That's a very, very simple example between a cash creates versus an in-kind. And the advantage is that the SEC is basically putting everything under the purview of the United States regulators, which, by the way, as much as people hate them, have proven to be the best, right? As much as people hate the US regulators, they have proven to be the best option in the world. So what they're saying is that you got to get that cash when it comes in, And you, based on the mandate of that ETF, have to go and purchase that Bitcoin cleanly through a US registered exchange, which is going to be Coinbase. So yeah, it's a little bit more costly. It's a little bit more time consuming when it comes to admin side. But from what I can see, it's the best option to make sure that there's people that will argue that, one Bitcoin is equal to one Bitcoin, and I agree. But from a regulatory and financial markets perspective, you don't want Bitcoin that's entering that fund that was used for terrorist financing or stolen Bitcoin or anything like that. And I think this does a better job at making sure that that's the case. YouTube, I think, is extremely powerful. I was reading a Charles Schwab report, and they were saying that something like 17% of their funds, right, in their client survey, people were utilizing social media to direct where their investment was going. 17%. It was like $20 trillion or something of capital, of overall capital. And, 70% of that was YouTube driven. Phenomenal. So I think YouTube is powerful. And these people are just not educated in what Bitcoin is, and they don't understand the opportunity. The problem is everything feels okay, right? When everything feels okay, you don't have the fear or the greed because you feel safe. Oh, I have $1 million property portfolio today. In a year, I have a $1.3 million property portfolio. Sure, it should be worth 1.5, but at least it's worth 1.3. Marketing is everything, right? So, and now you're going to have these funds that can actually take their 1% fee or whatever it is and utilize 70% of it in marketing to get more capital in it. And the beautiful thing is, if we have this step function approach to price, then every 4 years their fees compound, right? It's not just the price of Bitcoin that compounds, their fees compound, which means they can put more money into marketing. So not only does BlackRock have the best performing fund this Bitcoin, but also the best performing fee generator is Bitcoin, and the best performing ROI on marketing is Bitcoin. So within a very short period, like 2 or 3 cycles, you're looking at BlackRock's entire purpose becoming Bitcoin because it's the biggest fee generator for their shareholders. So, to me, that's absolutely huge because you now actually have a proper marketing department for Bitcoin. Not and by the way, marketing goes beyond just retail, right? You got to market to senators, you got to market to politicians, and they have lobbying arms for this sort of stuff, right? I'm not talking about while we've seen a great job. I want to say this before I say what I'm going to say next. We've seen a great job with the companies that have been venture backed in the Bitcoin space. They've done an amazing job at guerrilla marketing. It's not what's needed next, right? These happy hippies are not going to get it done. What you need is the lobbying arm of BlackRock. You need the lobbying arm of Goldman Sachs. You need that in order to start pushing Bitcoin into the worldwide public sphere. No one wants to hear about Bitcoin going up from someone sitting in sandals and a t-shirt. I don't care what anyone says. They want to hear it from their BlackRock advisor, right? I'm talking about the main capital of the world. I'm not talking about the adoption phase. The adoption can continue as it's going. I'm talking about bringing every new dollar from an institutional perspective. No one's looking on the internet to try and find someone who's in a t-shirt and in sandals unless their name is Jack Dorsey and they're worth a few $1 billion. No one is, right? They're looking for someone to call them up and present Bitcoin as an opportunity that BlackRock is backing. That's what they want for institutional funds to come into the market, and that's what's about to happen. In addition to that, we're about to get a reversal in rates. And so now capital is going to be looking for the highest return, right? Because it now needs to move out of its safe period. So we've got a lot coming here for Bitcoin overall. Marketing budgets is the most important thing that not many people are paying attention to because they just don't understand how greed and fear works. Everyone wants to educate people on Bitcoin, right? And that's very, very important. But I need to spark the fear and greed inside of people first. And then once we do that, then the education can take over. And the marketing budgets will do that. Imagine seeing Grayscale is already doing this, right? I'm sure you've seen the ads in the airports in the US, et cetera, et cetera. Imagine when you can do it worldwide. Imagine when there's 50,000 people paid by BlackRock to sit on the telephone every single day and contact $130 trillion worth of capital to tell them about their best performing fund. Like, that's real marketing, right? And that's coming for Bitcoin soon. All right, as you can see, a lot of changes are coming to the market when it comes to Bitcoin because of this ETF. This ETF is going to institutionalize this asset. The ETF is going to allow Bitcoin to become a cash flow generating asset. The ETF is going to allow the Bitcoin to become a collateral asset. Bitcoin is going to become the best alternative, because if you're thinking about putting money in REITs, which is a real estate investment trust, or SPY, which is the S&P 500 index fund, you now have to actually look through and say the Bitcoin fund beat out all of my alternatives. Bitcoin is now becoming a mainstream asset, which means that people will assess it. At the end of the day, as a capital allocator, your job is to analyze all of the options and go, which one is the best one for my money? And normal people have chosen real estate as the best thing for their money because they get sold this lie of cash flow and everything else that comes in with real estate. The biggest advantage real estate has right now over Bitcoin is the tax advantages that come from real estate versus everything else, especially in the United States and countries like the UK. That is about to be smashed to pieces, and then the next week I'm going to focus on demonstrating exactly why Bitcoin is better than real estate, which is why I want you to subscribe, because ultimately there are still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy.